Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. In the last class, we started that we almost finished accounts still, but I thought there are some topics that I needed to cover, which I thought I would. I felt we didn't do justice to CSR, so I would like to go again over this a little more. See, with the Companies Act 2013 has brought what is known as, see, because this is important from the exam point of view, therefore I am reiterating it. That's all. We covered it in the last class, fag end. Therefore, I want to just reinforce it, cover one more topic, and then move on to audit. That's the idea of today. Right. So what is so different about the new law is that, see, CSR was always being done by companies. Corporate social responsibility is a conceptual framework. It is giving back to the society within which the company exists. Okay, so it is laudable, no doubt about it. Large companies like Tata Group, Wipro, to name a few, to name a couple, Ashok Leyland, and some of the big public sectors like BHEL, Indian Oil, they do a lot of CSR in hundreds of crores. Their profit is huge. So they also allocate automatically. But what was the peculiarity of the Companies Act is that this particular section 135 of the Companies Act brings what is known as compulsory CSR. So they prescribe a certain limit up to which, if you are crossing that threshold limit of net worth turnover or net profit, then that company has to constitute a CSR committee. And so that is the beginning. So you are supposed to constitute a CSR committee. Once you are compulsorily required to constitute a CSR committee, they say if such companies which are required to constitute have to contribute every year a certain percentage. Compulsory. It is a law. You can't say you have to do it. If you don't do it, it's a penalty. So that is the point you have to understand. So therefore, we should know which companies are required to constitute a CSR committee. 1. Then what is the compulsory amount to be transferred every year? 3. What happens if the amount is not utilized in that year? 3. 4. What about long-term projects? When I need to spend money over a longer period, how do I handle it? These are the main questions. The rest of it is just theory that you can read, or you can listen to my longer lecture, wherein I will go item by item. What is CSR is mentioned in Schedule 7, the last schedule to the Companies Act 7. It is mentioned. A lot of items are there. I don't want to waste your time going through it. But if you watch the video, you will find it is clearly mentioned there. So maybe I thought I could mention here certain items that the law feels are not considered CSR. So they are saying, hey, Baba, if you say this is CSR, we won't agree. For example, any activity undertaken in pursuance of normal course of business of the company, mostly in the nature of employee welfare, staff welfare. Anyway, so for example, you have an eye camp for all your employees. You can't call it CSR. You have an eye camp or a dental camp for your employees. That cannot be treated as CSR. Or see, many people try to bring business expenses into CSR. It cannot be CSR. For example, you plant trees in your factory, right? You do it. There is a business expense. You cannot do it. But actually, conversely, if you claim any amount spent under CSR, compulsory CSR, it is not allowable as a deduction under the Income Tax Act as a business expense. The minute you say it is CSR, it is not allowable. On which I have a different opinion, but that is not the point. Point is, any expense which is incurred for the purpose of business of the company cannot be claimed as CSR. Only exception, That too for the financial years up to 23 March is the great so-called COVID-19. So think about it. A company should be a pharma company. Obviously, it should be engaged in R&D for new vaccine or drugs, etc., for development for COVID. Not only that R&D should be carried on in collaboration with a recognized institution mentioned in Schedule 7.9. 7.9 talks about funding of organizations which are doing worthy research. So that this organization should be one of those. So the company should partner with them, collaboration, and do it. So all this is nonsense. See, this one exception need not be there. Who can claim it? Only a pharma. That too a pharma which is engaged in COVID medicine. Hardly 3-4 fellows will be there. Those fellows only can claim this if at all. The rest of us have to simply read this and go. So these exceptions don't really work. Right? Any activity undertaken by the company outside India, not eligible for CSR. You want to go to Sri Lanka and you want to support the people there who have been suffering from the genocide or whatever. You are welcome to do it. Nobody can prevent you from doing it. But you can't include it under CSR, compulsory CSR, as part of your CSR, because it's carried on outside India. The only exception is, suppose one of the activities which is permitted is promoting sports by giving support for training of sports people. So it needs heavy training, right? Coaching, etc. They can't spend it. So you buy the kit for them, you hire the coach, you pay the coach, whatever. The idea is that the person would perform well in Olympics or whatever. No. So whatever it is, if as part of that activity, you are training an Indian sports person representing any state or union territory at national or international. So either he should state, union territory, no, national or international. So the person is going to represent the state or represent India at international. Such a person, if you want to support, they need training. Let us say that the training for that person, badminton, will be given in Taiwan by a very famous Taiwanese coach. Chalo, send this fellow there, sponsor his entire training, whatever you want to do. Though the activity is happening outside India, it will be eligible for CSR. Exception, only exception. Otherwise, if you go around doing any CSR work outside the borders of India, sorry, it will not be eligible for compulsory CSR under 135. You, friends, nobody is denying you from doing it. Please go and do, but don't include it for your CSR in India. CSR expense, no. Contribution of any amount directly or indirectly to any political party, obviously. Okay, so because under section 182 it is already covered, it is not prohibited. You can give. Any such contribution can be claimed as CSR. Okay. There obviously, where is the corporate, where is the social? There is no responsibility at all. So why? Activities benefiting employees of the company. So if your employees are going to be benefited, that you cannot pass it off as CSR. Sorry, many companies do. See, we appreciate what you're doing. We like you. You want to do good for your employees, etc. But not eligible for CSR. But see, between you and me, every year about 18 to 20 of my core group, the top managers and core good performers, I would say, core team, about 20 of us, we go abroad for an annual tour. It's a benefit for them. Idea is to motivate them and to take it. We also use it as a team bonding and, ensuring that they are gelling together as a team. I get an opportunity to also to speak to them, coach them at a very personal level. It's whatever it is. This expenditure that the firm incurs cannot be claimed as CSR. I mean, not that I'm compulsory CSR, it's not that. If at all, let us say that I become an LLP, and then definitely the MCA will say LLP also compulsory CSR. Then whatever it is, it cannot be claimed as a CSR. Such expenses benefiting employees cannot be claimed as CSR. Okay. Activities supported by the companies on sponsorship basis for deriving marketing benefits. See, flood victims, I want to give this thing. Agreed, give. But if you use it as a marketing gimmick, sorry, no, it is not CSR. See, you are getting some benefit out of it. For example, a toothpaste company distributes free toothpaste with its brand on it. Friends, you might say I'm promoting dental care, but your product you're promoting now. Sorry, not CSR. Okay. Which see, all these people who manufacture spectacles, they love to give eye camp in schools and old age homes. Because they will ultimately they will be able to sell their products. Yeah, see, initially it may be free. Later on, once the power is there, we say you have to have a glass. You will come to, he'll give his card and go, you'll go to him. I seriously don't know. So that is, sorry, not CSR. Because it is meant for deriving market benefits for your products or services. Any activity carried out for fulfillment of any other statutory obligations under any law in force in India. Okay. So, where you are only fulfilling a statutory obligation under the Factories Act, you're supposed to have a shed where employees can have their lunch, shaded area where comfortably seated, they can have their lunch. Boss, this is part of your statutory obligation. You're supposed to do it. Now you can't say we have built a shed. Anyway, it will cover employees also. Whatever it is. Whereas they're trying to plug all the loopholes where our people will try to have ordinary expenses being passed off, being hidden as CSR, and yeah, that's all. Just thought I'll cover this because sometimes they may come out with a question. Now, what I want to do is, yes, please, we already gone through it. Just one more time. Remember, any one condition is satisfied also, you are required. It's not simultaneous. Why? Because I've highlighted now, or. See, the minute that disjunction or, maybe in our next class, inshallah, we'll be studying interpretation of statutes when we will talk about the conjunction or the disjunction. So here, it's not a big rocket science. If the word or is used, then even if one condition is satisfied, you are caught. If the word and is used, both conditions have to be satisfied. Here, my guru and past president of the Institute of Chartered Accountants of India, CAR Bhupati, used to, very beautifully tell that income tax. When he was teaching income tax, he will say, look here, my dear friends, whenever the law wants to catch you, whenever they want to make it applicable to you, they will put or. Because even if one condition is there, you are caught. So anything that is going to catch you, anything that is going to bring you under the tax net or whatever it is, or make it applicable to you, usually they will only give or. Either this or that or that. Any one condition, that is what you know. But if they want to give you a benefit, if they convey some benefit, they will say and. Both conditions are to be satisfied. Even if one condition is not satisfied, you won't get the benefit. So this is typical of the government. He will say that very humorously. One of the greatest teachers of income tax. Fine. Believe me. So today, if he is going to take a lecture, the first 10 rows will be occupied by chartered accountants, not by students. Because we will go and sit there and learn again from him. Such is the greatness of Mr. Bhupati as a teacher. Okay, so this is something, and for me, my luck was that not only did he teach me income tax, he also taught me, rather mentored me on how to lecture and how to become a teacher. I had the good fortune of being mentored by him in a very, very different way. He used to even sometimes wait after the class for me, come out, and then he will say, Shrikant, what are you doing? You are shouting. Lower your voice, control your voice. All sorts of things he has done for me, for which I will never forgive. Madam, I'm in an online lecture. I will call you back, sure.
Thanks, Jason.
Sorry about that. So client is calling, like, now onwards, it will bring salary. So the point is, or remember, so even if one of these conditions is satisfied, you have to constitute a CSR committee. What are those conditions? Net worth, rupees 500 crores or more. Turnover, 1,000 crores or more. Net profit, 5 crores or more. Any one condition, CSR. So what you should do during the immediately preceding financial year, if this happens, for example, we have to see these numbers for 24 March. If in 24 March, as per the financial statement, your turnover is 1,500 crores. Congratulations. But you are also compulsory CSR. Your net worth has become 500 crores or above, or net profit of 5 crore or more. You have to constitute a CSR committee. It should be having 3 or more directors. And at least one director should be an independent director. So independent director is basically a director who does not have any financial relationship with the company. He is not an employee. He is not a consultant. He doesn't have any income from the company. He will be independent. Okay, independence is financial independence. Okay, no relationship with them. Okay. So this is only for constitution, but this is very important. While calculating net profit for this purpose, not only for the purpose of 5 crore, but also for the purpose of calculating the percentage of CSR, you should take the net profit as per P&L account, profit for the year. Then in that profit for the year, if you have included any profit from any overseas branch, you can reduce it. Why? Obviously, now we saw there, right? They said any CSR done in a foreign country will not be considered. So here they say profit arising from overseas branch to be reduced. Agreed. Similarly, you are having shares in other companies. You are invested in other companies. Those companies are complying with Section 135. They are contributing. And then they are giving dividend to you. So that dividend, which is given by a company, which is already complying with the provisions of Section 135, it is included in your profit, you can reduce it. So that balance amount only you have to calculate 2% or whatever that we'll see. Right, sir? Net worth is a definition 257. In preliminary, you would have studied it, but basically here. So always know this net worth definition will be coming in many places. Aggregate of paid up share capital. Once again, I'm going to repeat, even at the cost of irritating you, paid up share capital includes preference capital also. And all reserves created of profits. For the calculation of net worth, you can include securities premium account. See, do you notice one more thing? When the word free reserve was used, it was defined differently. Free reserves means reserves set apart for any, that is another definition. It's not there now. Free reserves means reserves which are available for declaring dividend. Right? Here they are not saying dividend. They are saying created out of profits. Created out of profits, which could include CRR also, because basically CRR was once upon a time out of profits only. See, basically in net worth, what are we calculating? We are calculating the capital of that company. The base capital of that company. Right. How much money is this company is rotating? The management of this company, how much money are they having at their disposal? So which will include the permanent capital. With the CRR is part of the permanent capital. Securities premium account is part of the permanent capital. Though CRR and securities premium account cannot be used for declaring dividend. Therefore, CRR is not free reserve, but it is included for calculating net worth. Don't forget that. Okay. Also, preference share capital. So net worth is a different calculation. Free reserve is a different calculation. Don't confuse. Debit or credit balance of P&L account, whatever, surplus. From that, you reduce accumulated losses, deferred expenditure, miscellaneous expenditure, not written off. All this, I am informed reliably, will be shown under the non-current assets, on the asset side. Earlier, there was a separate line item in the balance sheet. Miscellaneous expenditure to the extent not written off. They removed it. Then they said you have to take it and reduce it from the reserves and surplus. The reserves, negative. Then all sorts of anomalies came. Like, for example, suppose the accumulated losses, preliminary expense, everything together is more than the reserves. More than the share capital. Look at that balance sheet, how it will be. Okay. So, but that is not possible because this side fixed assets will be there. And to the extent there will be some capital there, but whatever it is, it will be very peculiar where the reserves are there, but the losses are capital is eroded, but assets are there. Balance sheet tallies, but funny balance sheet. Therefore, they have again taken these fellows out and put them under non-current assets. No problem. Wherever they are fictitious. They are not assets at all. They are basically unabsorbed losses and expenditure, which have to. Their rightful place is in the P&L account. We are only keeping them in the balance sheet either because they are capital or because we are treating them as having benefit over more than 1 year. Inversely applying matching concept, we are putting it there, rightly or wrongly. That is the point. Anyway, revaluation reserve not to be considered. Okay. And write back of depreciation because of change in the method of depreciation. There is a write back of depreciation not to be considered. An amalgamation may result in capital reserve not to be considered. Right? Now, just we'll go through this. RERA Limited, a company incorporated under the Companies Act 2013, having paid up share capital of 10 crore, turnover of 100 crore. Net. So immediately you have to compare it with these numbers. 500,005. So 10 crore. Paid up share capital 10 crore. So we don't know what net worth. We shall presume that that is the net worth. Turnover of 100 crore. Net profit of 3 crore. And securities premium INR 300 crore. As per the audited batch. So net worth would be share capital, paid up share capital 10 crore plus securities premium 300, 310 crore. Turnover 100 crore. Net profit 3 crore. Okay. Now the CFO of the company informed the directors of the company that CSR committee is required to be constituted. Right. Now, we shall presume that the CFO is not a member of our institute because no member of our institute will make mistakes because we are chartered accountants. Okay. So we will not get into the qualification of the CFO, but rather we will try to see whether he is right. So the directors seek your advice as a professional regarding the criteria. So in the present case, turnover is 100 crore, net profit is 3 crore, and net worth is 313. Kyo 313 because 300 plus 10, I forgot, I'm sorry. This profit balance is 3 crore. That is P&L account ka balance na. So that will be added for net worth. It is P&L account ka surplus balance. So total will be 300 plus 10 plus 3, 313 crores, which is still not nowhere near 500. Turnover is nowhere near 1,000. Profit is not 5 crore. Therefore, RERA Limited is not fulfilling any criteria prescribed. So we have to politely and gently inform the CFO that, Baba, please read the Bar Act again. Kindly equip yourself with the right knowledge before you presume to advise the directors. So this is another example. The balances extracted from the financial statement of ABC Limited are as follows. Net worth 100. See, this question, there are two issues now. As on 31/3/2021, they are giving one figure. As on 39/2021, it's a provisional, not audited. Numbers are there. Now, what has happened? On 31/3/2021, my net worth was 100. 39 also 100. Turnover on 31/3, the last year was 500. But current year by 39 itself, I have achieved 1,000 crore, doubled in 6 months. Wow. Net profit also from 1 crore of last year, by 39 provisional accounts, I have become 5 crore. Now the point is, in the current year, in the year under review, for 21/20, in the given question, should I be for constitute a committee? See, in the given question, the company does not fulfill any of the criteria for the immediately preceding financial year. Therefore, for the year ended 21/22, you are not required. But for 22/23, you may, because your turnover is no 1,000. Hopefully, the net profit will be more. See, this is 39. So on 31/3/22, inshallah, it must be more. And if it is, then you definitely have to constitute a for 22/23 year. But for 21/22, no. Now, you go 8:30. 8:30. The board of every company required to form CSR committee shall ensure that the company spends in every financial year at least 2% of the average net profits of the 3 immediately preceding financial years. So you have to see the net profits of 3 immediately preceding financial years calculated in the manner we have discussed. then average, divide by 3. You will get a number. On that number, you calculate 2%. Okay, clear? In whatever you are doing a CSR expenditure, a little bit can be spent for administrative overheads. But what is an administrative overhead? See, Baba, I will tell you. I have been an auditor for so many NGOs. See, we have decided to cover, say, child relief. So we have decided to we have identified 10 districts in Andhra Pradesh. And we said these 10 districts, we will identify children who are coming from, say, remote villages, tribals, communities that have been marginalized, whatever it is. Now, these children need support. So we agreed to sponsor them, monitor them, etc. Now, to identify these children, to find out who are eligible, who are not eligible. And then we have to create data bank. And then we need to monitor. Okay, to that extent, it will be project related. No problem. Monitoring the child's welfare, 100% project related. But the minute you want to do this in 10 districts, automatically you will have social workers. Minimum you'll have 60 social workers doing it at each district level, then taluk level. So minimum 60 people will be handling. Those 60 people, their payroll has to be handled. Their everything has to be handled. Then, with so much money coming in and out, accounts have to be maintained. All this will require administrative overhead. Are you able to understand? So the basic project spending will be there. But to monitor this project spending, minimum budgets have to be prepared. Every year we have to submit a budget to the funder. We have to give proof of thing. Auditing has to be done. Boss, that will definitely cost money. But they are saying whatever you spend on that should not exceed 5% of the total CSR expenditure. That's all. So if you're going to spend 100, then out of that 100, 5 rupees can be administrative. Beyond that, you cannot spend it. Okay. But administrative cost will be there. See, I've audited easily 5 national level NGOs, non-profit organizations, national level. Across the country, they have done the projects. As I told you, the Indian Network for People Living with HIV/AIDS, Child Relief, so many of them. See, each one across the country. So it isn't easy. There will be cost. Sometimes, government also needs to understand how it works. You will find, since you are not, when you come to final FCRA, there also they will give a cap, 20% of the total. It cannot go beyond that. Anyway, Tirupati Limited, a listed company, has made the following profits. The profits reflect eligible profits. So we have financial year amount. So you have to take the last 3 years ka average. So 50, 70, 30, right? 50, 70, 30. Total. I think I covered this, so I'll move on. But since I just wanted to reinforce, that's all. I want to reinforce. Also, in case there is any amount remaining unspent pursuant to any ongoing project, then that should be transferred within a period of 30 days from the end of the financial year to a special account. What is an ongoing project? Which goes beyond, see, in 1 year, I have not spent fully. Then you should transfer it to a fund specified in Schedule 7 within 6 months of the expiry of the financial year. So this year you are supposed to spend 2% of the average net profits. You are not to spend it. Then what is your duty? You can't spend it, no problem. 6 months, transfer the money to us. We will spend it for you. That's what the government says. No, sir, I'm having an ongoing project, sir. Chalo. Ongoing project, how long? Sir, for 3 years, sir. Okay, sir. So your project began in which year? 23, sir. 23 March. Right, sir. 23 ka 24. Now 25 is fast approaching. So 25 March also comes. Have you spent the amount? No, sir. Why? No, sir, this, sir, that, sir. Whatever, sir. Whatever is the amount unspent in the ongoing project. See, maybe you said we will set up a toilet build block in a government school. Agreed. What did you do? No, sir, plan is not approved. Some nonsense you're telling. Okay. Whatever it is you're not spent now, that amount you give it to me. First of all, that amount you transfer it to a separate account within 30 days from the end of the financial year. So 31/3/2025, you have not utilized it. Then transfer it. Open a separate account, unspent corporate social responsibility account, transfer it. Now keep it in that account. and use it. Know that once you get the approval, you want to build the toilet block, now use it. So take another 3 financial years from that date. But if after the 3 financial years also you not spend this money, sorry, within 30 days, you have to send it to the fund specified in Schedule 7. So in my example, 31/3/25, within 30 days, means 30th April 2025, you transfer it. Then you have time. Okay, for 3 financial years from the date of such 3 financial years, meaning what? 31/3/26, 31/3/27, 31/3/28. 31/3/28 also not spent. Then within 30 days, by 30th April 2028, the money should go to the fund specified in Schedule 7. Okay, so there's a clear rule relating to unspent money, right? So this is it. These are all, you can always listen to my lecture. I just thought I'll see something made me feel I was rushing through another class. Now, once I complete the internal audit, I'll go to regular audit and auditors. Okay. So, and friends, remember the man talking to you has 35 years of experience, more than that. Now it's almost 38 years of experience as a practicing member of the institute. I worked for about 3 years with Pricewaterhouse as a junior auditor, then went on to become assistant manager audit. Then I resigned, started my own practice, and I've been practicing now. So when I am teaching auditing, definitely the man talking to you is a practicing CA. That will come out. I am not a teacher. Okay, I am not a professor teaching a subject to you. I am a practicing CA teaching auditing to you, or rather some provisions relating to auditing in Companies Act to you. So kindly, if I use that ownership in my communication, please don't mistake me for it. Because the color will happen. Now, 35 years of practice, I sign balance sheet, so I know what I'm doing there. That will come. Kindly do not take it otherwise. And since many of you are either doing articles or going to do articles, you should also have that ownership and relationship. You will be auditing companies, visiting the company as an auditor. In that sense, though you are an article clerk, you will be a representative of the partner, and you will be given a lot of respect and regard. That respect and regard should be earned by your awareness of the subject, by your command over the subject, by the way you talk to the client and his employees and make them understand what is the right rule, what is the right law, and how the number should be represented in the P&L or balance sheet. And that will command respect with the client, and automatically they will have regard for you, and etc., etc. So kindly keep this in mind when I am talking. So kindly don't take, otherwise why is he telling signing the balance as if he is signing the. I'm not a college professor who has not seen a balance sheet in his life. I am a practicing CA who does it every year. At least I sign my quota from my firm, and my other 6 partners also sign. So together, and I am the reviewing partner also in many cases, and the ethics partner also. So for your information. Now, so first we will get into internal audit. Internal audit, as you know, is a function meant to prevent fraud and to ensure that the internal controls are in place. Early detection. More than that, operationally, whether the company is efficient, whether the money is being used properly, all that will be the concern of an internal auditor. And the company is small, these activities of monitoring, whether the money is being used properly, whether this is the correct method of doing it, or there are other methods of carrying out this activity, all this will be done by the owner directors themselves. Because small organization, once the organization becomes big, a separate department or a separate professional or a team is needed to go into it. So owner's own ability to monitor will become more and more difficult. The span of control will become wider. So there will be layers of hierarchy. Automatically, there will be a sense of lethargy, and there will be a larger standard operating procedure being prescribed for a larger organization. The minute an SOP comes in place, sometimes there will be loss of connection with the SOP. People will do what is convenient, which could in turn, open up loopholes, which initially may not have a problem, but over a period of time could be exploited and form an internal control, especially in a information technology-driven, IT-driven, accounting and process culture. Such loopholes are noted by somebody. Quietly, that fellow will go there and play around with the passwords and do something, siphoning off funds. So So there should be a constant watch for this and say, hey, these are the SOP. Why are you not following SOP? No, sir. That was the Diwali, sir. So I told Rahul to go and I gave him the password for my thing. Sir, no. If you are then tomorrow anything happens, you will take the responsibility because your user ID password is being used. So no, so this seems a little nitpicking, but this is the role of an internal auditor. And there's no other go because we are pointing out instances which by themselves are not serious, but if exploited by the unscrupulous person, insidious person, could result in large-scale siphoning of funds or fraud. Okay, so we are imagining a scenario and telling the company, now it's not happening, sir, but tomorrow this. So unless you stop this, it will happen. Right? Anyway, so now what you should remember from the legal point of view is list what are the companies which are required to appoint an internal auditor. First, listed company compulsory. Automatically, they should have an internal audit. If you're a listed company, should have an internal audit. Unlisted public company. Then paid up share capital of rupees 50 crore or more. So paid up share capital 50 or turnover of rupees 200 crore or more, or outstanding loans or borrowings from banks or PFI exceeding 100 crores or more, or YSS or because even if one of these conditions satisfied, it should have an internal audit. Outstanding deposits of rupees 25 crores or more during the PFI. PFY, previous financial year. See, when you are writing, please do not use abbreviations unnecessarily. Don't always write long form words and sentences. Do not use short form telegraphic language. Use grammatically correct sentences. But if you still want to have some abbreviation, you can. Method is first time when you are using the term, please use the full form. At the end, in brackets, give the abbreviated form. Thereafter, in the answer, you can use the abbreviated form. Because suppose you are repeating it again and again, then you can. And there are certain standard abbreviations that everybody knows. Try to use those. Okay, rather than anything else. Private company. So should a private company have compulsory internal audit? Yes, provided the turnover is 200 crores or more, or outstanding loans or borrowings from the banks or PFI is exceeding 100 crores or right. So these companies compulsorily have internal audit. So Nataraj Limited is an unlisted public company having paid up share capital of 80 crores during the preceding financial year, FYI. The turnover of the company was 110 crores. So should the company have an internal auditor? Let's see. 80 crore paid up share capital. Paid up share capital 50 crores or more. Turnover 200. Turnover is 110. Chalo. So Nataraj fulfills the criteria, paid up share capital. Any one is enough. Therefore, it is mandatory for the Nataraj Limited to appoint an internal auditor. Now you can try to think of this. Maybe if query pad permits, we can even answer it. X Limited is a listed company having a paid up share capital of 25 crore as of 31st March 2021 and turnover of INR 100 crore. The company secretary has advised the board that X Limited is not required to appoint internal auditor as the company's paid up share capital and turnover are less than the threshold limit. So paid up share capital 25. Okay. Turnover 100 crores. Okay. What is the problem here? What is the problem here? What has the company secretary missed that you and I as chartered accountants have to be very careful about? Do you agree with the advice of the company secretary? Yeah. Sangeetavani, yes, can you go for the second so-called question number 10? That's not 10. Actually, in the larger PowerPoint, this is 10. Our friend, the company secretary, sorry for laughing. So, X Limited is a listed company and hence is required to appoint an internal auditor. Because listed company, no limit, whatever it is, it has to have. Only for unlisted public company, these limits are given. For a listed company, the minute they are listed, automatically they should have an internal auditor. Okay. So let's not, this is a similar problem. Let us not. Who can be an internal auditor? Chartered accountant, cost accountant, other profession. Even for that matter, company secretary, if having necessary possessions necessary. See, for internal audit, more than knowledge, of course, knowledge is needed, more than knowledge, experience. Experience and with large companies is very important for internal audit. The internal auditor may or may not be an employee. So he may be an employee also. So a statutory auditor you'll be seeing later on cannot be the employee. Or rather, an employee cannot be the statutory auditor. Whereas internal auditing can be done by an employee. No problem. So internal auditor may be an individual or a partnership firm or a body corporate. So here they are saying even a body corporate can be an internal auditor. The audit of the company or the board shall formulate the scope, etc. Audit committee should do it. Normally they do it. So this is how it is. So quickly saying goodbye to accounts of companies, we will move on to audit and auditors. Right? This topic, audit and auditors. We'll quickly move on to this topic. Review of overview audit and auditors. So the audit and auditors topic, just to give you a broad overview, some of these topics may not be covered today, but just to give you a broad overview, we have to talk about appointment of auditors. More importantly, we have to talk about disqualification, eligibility, qualification, and disqualification of auditors. We have to talk about, usually, my guru, Professor K. Sanantaraman, who taught me company law, how to teach, he will always begin with qualification and disqualification. His point is, first you should know who is qualified, who is not who is disqualified. Then only we can go for appointment. There, first auditor appointment, subsequent auditor appointment. Then removal, whether by resignation or removing him before the term of office or not appointing him at the AGM, whatever. Then, of course, when all this is done, hope of reward sweetens labor. Therefore, remuneration. Okay. Lastly, the powers and duties of auditors and regarding auditing standards. Of course, while you're talking about disqualification, we should also talk about prohibited services. 144. See, this list is in the section order. Whereas while conducting the lecture, I will generally not go by section order because sections of the Companies Act, they have been done with some minds. I don't know what they have done. But the logic is more important. When you study the way I'm covering it now, the logic of thought flow will be there. That is all. Whereas if you go by section order, what happens? Sometimes it will be jerky. See, it's just how it is. The sections are not logically framed. They are there. So we will end up to understand them logically. This is something you might want to pick up the skill even in the later on in a professional life when a new law is coming or an amendment to the old law. Take that section and first read it. And then logically follow the thread. Suddenly everything will fall in place. The logic of the section, you leave it. Sequence, you leave it. You take the sequence of logic and go by that. Suddenly you will find, this is what it's all about. You'll be able to comply. Signing of audit reports. So the auditor to attend AGM. In case compliance is not there, punishment for the company, punishment for the auditor. And finally, of course, appointment of a cost auditor. Let us see. So who can be an auditor? Obviously, chartered accountant, member of the Institute of Chartered Accountants of India, right? As of now, we are the only professionals who are eligible to audit companies and issue an audit certificate. Okay. Who can be either an individual who is a member or a firm, provided the majority of the partners are practicing in India are members of ICAI. So only partners who are CAs can sign on behalf of. Okay. Non-CA member of a firm cannot sign on behalf of them. This is boss. This is given in the Companies Act. The institute has no control over this act. They are telling it is there. We have not permitted partnership firms where other than CA can be partners. CA Institute has not permitted. In case CA Institute takes its view and decides to permit also, if at that time we admit company secretary, cost accountant, etc., advocate, then only the majority of them should be practicing CS, and only the CA can sign. Okay. See, for example, my daughter is a company secretary. My son is an advocate. So if I want tomorrow, I can form a firm. And one of our partners, the wife is a cost accountant, very, very leading cost accountant. So we all decide to bring them into the firm. We can, but not now. Even if you do that, majority of the partners should be members of ICAI. And only partners who are CAs can sign, right? So see, this is the Companies Act. The institute has also got to take a call and tell us, as of now, we have not. You cannot do that. So before, let me preempt your question. No, not now. Abhi to nahi. Maybe later on. Yes, you may. I don't know. So who is disqualified? Who cannot be an auditor? A body corporate, other than LLP. See, LLP Act will be seeing it maybe on June 1st or whatever. There they will define body corporate in a different. There they will include company. Okay. Here, body corporate, see, under the Companies Act, body corporate includes LLP. LLP is the body corporate under the Companies Act. Right, sir? And body corporate. So, but a body corporate cannot be a auditor. Therefore, they said, since LLP is a body corporate, they said other than LLP. LLP alone is the exception. Why? Because many firms of CAs are formed themselves as LLP because of the benefit given LLP, which we will see. The benefit of limited liability of a partner makes it a very powerful organizational structure. Therefore, we'll see. But as of now, remember, a company, say for example, you become a member of the institute, and then you and your friends, all are members, CA members, you form a private limited company. Okay. Auditing and Assurance Services Private Limited, or Ratna Auditing and Services Private Limited, whatever your names. No problem. We are happy. We salute you. But that company cannot be an auditor of any other company. The reason body corporate has no brain and no soul to be damned and no heart to love. So such an entity, artificial entity, cannot be an auditor. Somewhere an auditor has to have a judgment call. Of course, you will say, well, why can't the directors? Who will they do? The directors, you cannot make the directors liable. So it doesn't work. Okay. Members are members. They cannot become. So members, once they invest money, that's it. So see, the idea is a private limited or public limited company is an investment vehicle. It is not meant for this purpose. So yes, what you should do then, I want to enjoy limited liability, sir. How to see? We are going to form a firm. Myself and two of my friends who studied with me in CA, my articles, whatever they want to form, they form. No, sir, I'm worried, sir. Those fellows may do something. I might be going to jail because what to do? Then form an LLP where any partner does anything, the other partners are not liable. Only firm and that partner alone will become liable. So that alone is exempted. LLP can be an auditor. Firm, of course, can be. We already saw a normal good old firm under the Indian Partnership Act can be an auditor. Okay. So an officer or employee of the company cannot be an auditor. I told you now, director cannot be auditor. Officer includes all of these. Director, CFOs, company secretary, they cannot become auditor. Though they may have the qualification, they cannot. Employee cannot. Obviously, see, if you are parallelly studied auditing or you have already finished auditing, you will be thorough in that. One of the hallmarks of the auditing, one of the distinguishing characteristic of an auditor is independence. Independence. I should not have any obligation to that company financially. So that if they talk any nonsense, I can tell them, boss, this is what the law is compliant. The maximum threat they can hold on my head, the Damocles sword they can hold on my head is, we will not reappoint you. That we have some protection, don't worry. The MCA has given us extremely good protection there. in case there's such a threat, or if they force you to resign, you have a method of informing that this is what is happening. This company is run by fraud. You are entitled to say that. And they also know that you have the right to say that. So protection is given for that. But employee, how can he be ever independent here? Sorry, however much you might say, I am so and so, I will be independent. An employee is an employee, boss. You have to do what your boss says. Certain degree of obedience is there. Nah? So long as that is there, to an extent, yes. An employee chartered accountant is not dependent. Is not independent, right? A person who is partner or is in employment with an officer or employee of the company. So Mr. A is the CFO. He is also a partner of your firm of chartered accountants. There is that firm has another partner. That partner also cannot be auditor. Or Mr. A is the CFO of a firm. He is having a sole proprietary. In that, he is having a chartered accountant. He is in employment of that firm. That person also cannot be a auditor. Now here we come to more independence-based issues. Very important from exam point of view also. Financial independence. See, I am a chartered. I am auditing Tobacco Limited. Sorry, whatever. Mannar and Company Limited. Now that company, if I'm also a shareholder, a certain degree of independence is lost. Am I correct? See, if I'm okay, sir, let us say Mannar and Company Limited is doing well, and so if the profits are higher, the price of Mannar and Company Limited will go up. Now I am the auditor. Now when I'm signing the balance sheet, how my mind will work? Hey, better to show higher profit, because then the price would go up. Huh? So I will support the directors in doing some nonsense. Therefore, they say a person who or his relative or partner is holding any security of or interest in the company cannot become a auditor. So if you are holding shares in the company or its subsidiary or of its holding or associate company or a subsidiary of such holding company, let me see if I can draw it for you. See, this is the company, subsidiary, holding, associate. Associate means a company which this company is holding 20%. One more category is there. Subsidiary of such holding company. See, if you can't hold shares in the company, its subsidiary, am I correct? You can't hold shares in the company, subsidiary, holding company, associate, or any subsidiary of its holding company. Right, sir? One exception. The auditor cannot hold you. The person proposed to be appointed as an auditor cannot hold even one security, but relative may hold up to face value not exceeding 100,000. Face value, be careful. See, the face value of Infosys share, एक share is 1 rupee. So 1 lakh shares can be held there. 1 lakh shares of Infosys can be held. I do not, let us see what is the price of Infosys share. Let me see my last portfolio sent by my office. Check up what is the price of an Infosys share. One share of Infosys, 1,465 as of last Friday or whatever. Today it might have changed. Point is 1,465, right? So 1 lakh shares into 1,465. 14 crore 65 lakhs. You can invest in Infosys. Still, the relative will not have any problem because the face value should not exceed 1 lakh. Face value should not exceed 1 lakh. Okay, got it? Now, so the firm can be appointed as auditor of Infosys, even though the relative of a partner is holding 50,000 shares into 1 rupee, 50,000 only, less than 1 lakh. Of course, the amount, I mean, it should, whatever the money they spend for investing is not my concern. Face value, what is it? That's be careful. You have to be very careful in this because sometimes they might give you market value. In which case, don't get confused. Just remember face value. A person, I'm reading it again and again because these are continuous sentences. A person who is or his relative or partner is indebted for an amount in excess of 5 lakhs. Indebted means borrowed money. From who? The auditor, or I will not say auditor, person who is proposed to be appointed as auditor. Why I make that point? If he is indebted, he cannot be auditor. Therefore, he is only proposed. A person who is proposed or his relative or partner is indebted, means they owe more than 5 lakhs for an amount in excess of 5 lakhs. See, that 5 lakhs is a great benefit. So we have to, less than 5 lakhs only the amount should be, amount of indebtedness should be there. To the company or its subsidiary or of its holding or associate company, or all this is there. Also, instead of borrowing directly, what these auditor does or relative or partner is doing is they provide a guarantee on behalf of a third person in excess of 1 lakh. So that guarantee also, in case what? In case the third person pay, who will have to be? So the partner or liability will come. Therefore, no. They have given a ceiling of 1 lakh. Please remember, for relative may hold shares of face value not exceeding 1 lakh. Indebtedness 5 lakhs. Guarantee 1 lakh. Please remember this. For indebtedness and guarantee, even the auditor can owe money up to 5 lakhs. Auditor can give guarantee up to 1 lakh. Even the auditor. But whereas for shares, only relative. Now, you might ask me, sir, during the course of the year, relative is holding more than 1 lakh, sir. Suddenly, what to do, sir? No problem. In the event of acquiring any security or interest by a relative above the threshold prescribed, the corrective action to maintain the limits as specified above shall be taken by the auditor within 60 days of such acquisition or interest. See, I have put SIC there because so it is printed in that in the act. I am not, see, the grammar of the lawmaker I cannot question, but I would definitely say the sentence would be more elegant if it is in the event of the acquisition of any security or interest by a relative. In the event of the should be there. Even if you are saying acquiring, then it's better that you put the definite article there, the event of the acquiring any of, then of should be there. Definitely, there should be a proposition there of, in the event of acquiring of any security. Okay. Acquisition is a better word. It's okay. Anyway, see, these are all style issues, puristic issues, unfortunately. The persons who drafted the law obviously were not aware of this linguistic issues. So, relative already we have covered. I don't want to waste your time. Why I cover it here? Because in the examination, there will be a question on disqualification of auditor, wherein the word relative is used, in which case you should remember the definition. Okay, continuing. E, a person or firm who, whether directly or indirectly, has business relationship with the company or its subsidiary or its holding or associate company, or subsidiary of such holding company or associate company. Okay. See, here it says only subsidiary of such holding company, whereas here it says subsidiary, holding, associate, or subsidiary of such holding or associate. So in this diagram, we add one more. Here, one subsidiary also. Associate ka subsidiary. I don't know whether that was the intention of the law. Okay. Anyway, here there's a slight difference. I don't know if that's too small. Whether, just remember, here, not only subsidiary of the holding company, but also subsidiary of associate company, you should not have any business relationship. Business relationship shall be construed as any transaction entered into for a commercial purpose. Except, see, obviously, then what will happen? Sir, I am the auditor, sir. That is a business relationship. Agreed. That alone is exempted. Commercial transactions, the nature of professional services, permitted to be rendered by an auditor or audit firm. Got it? That alone is exempted. Whatever we have, for example, you can add statutory audit, tax audit, all that you can do. Tax advisory, go ahead, no problem. But there are certain prohibited services, be careful, that you cannot do. That's why they are very clear. They are very clear. They have said permitted to be rendered. Only those items you can do. That is exempted. But suppose there's a prohibited item you cannot give. Okay, now you cannot do with a company, subsidiary, holding, associate. A person whose relative is a director or is in employment of the company as a director or key managerial person. Person whose relative is a director. So I am the auditor. My relative is a director or is in the employment of the company as a director or key managerial person. See, recently what happened? One of the auditing companies where we are auditors, my partner wanted to become non-whole-time director. Non-whole-time director is an officer. So, non-whole-time director is an officer. Now, the firm cannot do this. Why? Because the partner is an audit is a director, boss. So he cannot be. What? The partner of the firm cannot be an officer of the company, and we cannot be the auditor. So the minute this happened, that year the next year we were not reappointed, and somebody else was appointed. And so these are very important. Okay, we have to be very, very careful. So commercial transactions which are in the ordinary course of business of the company at arm's length price, like sale of products or services, etc., by companies engaged in the business of telecommunications. See, by sale of products or services to the auditor as customers in the ordinary course of business by companies engaged in the business of telecommunication, airline, hospital, hotel, and such other similar businesses. See, when we come to interpretation of statutes, this will be, you will understand the implication of this. See, commercial transactions which are in the ordinary course of business of the company, the arm's length price, like sale of products, services to the auditor as customer in the ordinary course of business by the companies. Okay, engaged in the business of telecom, airline. See, simple logic was, you are auditing a telecom company. You will also, the partners will have to use mobile phones, boss. One. You will have to travel by flight. You may get hospitalized. You will have to stay in the hotel and such other similar businesses. This is very important. The word used is similar. Now the point is, later on when we come to interpretation of statutes, we will see rule of ejusdem generi. There we will say, if specific firms, specific words are followed by a general word, the general word should be read as if belonging to the same genus as specific word. Can I do it here? Can I read ejusdem generis? Can I apply that rule here? Can I say that such other similar businesses should be read restrictively as belonging to, connected with these? Now, subject argument. Because, see, telecommunication, airline, hospital, hotel, do they form any common group? Yeah, broadly you can say services. Because otherwise they are diverse here. Telecom, airline. So, but all of them are services. So if you argue that way, you can say such other similar businesses would mean only services. Sale of products will not be covered. That will be unfair because the intention is not that. I think so. So that such other similar businesses should be read widely. And even, for example, you are the auditor of an automobile company. You want to buy one of their cars, you can. Because one of my clients is manufacturing extremely good pickles, for your information. They're a good company. I like the pickle, boss. I can't take it. I can't take it free. My independence will be affected. What to do? I can't also buy. Because if I buy, it will become business relationship. I don't. A person who is in full-time employment elsewhere. So, if you are a full-time practicing CA, you cannot be an auditor of a company. If you are a full-time employment elsewhere, though you may hold COP, you cannot be an auditor under the Companies Act. Sorry. Okay. And obviously, because see, already you are in full-time employment, you will get up in the morning at 4 a.m., go to office, work till 7:30, 8:30, then come home. Sunday, maybe you will have to spend with the family. When you will get time for auditing? Therefore, full-time employee cannot become an auditor of a company. Okay. Elsewhere, or a person or a partner of a firm holding appointment as its auditor, if such persons or partner is at the date of such appointment or reappointment holding appointment as auditor of more than 20 companies. For simple, you are an individual, then you cannot audit more than 20 companies. Firm, then each partner will have a limit of 20. Firm as a whole, 20 into number of partners. Each partner has sub-limit, which is 20. You can't distribute. Like you cannot say A has a surplus which will give to B. No. A can do 20, B can do 20, C can do 20. A surplus cannot be used by B. But certain companies are exempted, which is we thank the MCA. Every day when I turn to the north and I perform my Sandhya Vandanam, I prostrate myself to the northern direction and I salute them and I thank them for this benefit. Okay. So in the case of private companies, the following are excluded, like one-person companies, thank you. Dormant companies, thank you. Small companies, that itself will take out a lot of guys out. Because small companies definition, if you see, many companies will come under small company definition. Then they say private companies having paid up share capital less than 100 crore. Thank you, boss. So many of my clients will go out of that. So that 20, I need not include these guys, which will leave me with 6 partners into 20. That's what? 6 into 20, or 6 into 2, 12, 120. In fact, 120 we have. 120, okay, we can distribute it between the partners and we can do it. More than 100 crore, private companies, public companies, listed companies, all that will cover in this. Easily they will cover. Okay. So this is a thing that you have to remember. So if that limit is exceeded, that person cannot be appointed as an auditor. So in fact, when you're appointing the auditor, you will actually ask him, are you eligible? Are you having eligibility? Can you audit us? Because if we are included, will the number go above 20? He has to confirm, yes, I have the limit, come. If he checks the list, then he has to decide. He has to surrender one other audit and take you. Otherwise, a person who has been convicted by a court of an offense involving fraud and a period of 10 years has not elapsed. I mean, obviously, boss, such a person, how can he be? See, auditor, we are certifying the accounts. How can a convicted felon who has gone to jail for a period of offense involving fraud, okay, whatever may be, even if he had paid 5 rupees fine, it is still. So, but still they say, boss, Srikanth, don't be so tough on these guys. After 10 years, even he would have reformed. He would have attended some Swamiji, something, and he might have become a good man. Let us give him the chance. So 10 years baad, you can take him. But for 10 years, this fellow cannot be appointed as an auditor. Okay. A person who directly or indirectly renders any service referred to in section 144 to the company or its holding company or its subsidiary company. 144 we will see. Prohibited service. So a person who is rendering any prohibited service or a firm in which a partner is rendering prohibited service cannot be appointed as an auditor of the company or its holding company or its subsidiary company. Right? Now, suppose, so how many disqualifications are there? H, A, B, C, D, E, F, G, H, 8 disqualifications. If any of these 8 disqualifications, the auditor incurs during the year. See, at the time of appointment, I was clean. Subsequently, for example, let us say he got convicted. Then for 10 years, he cannot be. No, immediately disqualified. Now, what to do? So, he will deem to be vacated his office. The minute he acquires. Only exception, relative acquiring shares. Only exception. Only exception. Security or interest being acquired by a relative. Then there is a grace period of 60 days. For 60 days, by which time if the relative sells the share or does something, then on the expiry of 60 days, no more. But if 60 days nothing is done, then on the expiration of the 60th day, disqualification. So then it will come here. So automatically that auditor shall be deemed to have vacated his or her office, and such vacation shall be deemed to be a casual vacancy. There is a meaning for this. Why if it's a casual vacancy, board itself can appoint. Except resignation, any other casual vacancy, board itself can appoint the auditor who will hold office to the conclusion of the next AGM. So let us see some of the problems asked in the past. CA Vikas is appointed as the auditor of ABC Limited on 17/7/2019. On 15/4/2020, his brother is appointed as non-executive director in the board of ABC Limited. So CA Vikas 17/7. On 15/4/2020, CA Vikas will vacate office. Sorry, he is disqualified. Mr. Ram, brother of CA Sham, a practicing chartered accountant, acquired securities of Mrs. COL Limited, having market value of 1,20,000, face value of 95,000. State whether CA Sham is qualified to be appointed as a statutory auditor of Mrs. COL Limited. Ram is a brother, relative, no problem. Acquired securities of COL Limited, market value 1,20,000, no. Face value 95, correct. 95 is less than 1 lakh. Therefore, Sham is not disqualified. But in case it is exactly 1 lakh, no problem. Above 1 lakh, see, I want to be very clear. Not exceeding 1 lakh. Face value not exceeding 1 lakh. Therefore, exactly 1 lakh, not disqualified. 1,05,000, 1,01,000, 1,01 rupees. Okay. Straight away, you are disqualified. Sham is disqualified. Anil is a beautiful story. I love this story. It is Prem Ka Kahani, beautiful story. CA Anil was appointed as auditor of DEF Limited on 30/9/2019. While conducting the audit, he met CS Neha, the company secretary of the company. They fell in love and got married on 15/1/2020. Sorry, this is not an emotional love story. What are the consequences of this vis-a-vis the continuance of CA Anil as auditor? So the two lovebirds have to come to harsh reality. What should happen? Sorry. Marriage on 15/1, what happened? Up to that day, no problem. But the minute Neha became Anil's wife, relative. So what happens? She's a key managerial person. Company secretary is a KMP. Hello. A person whose relative is a director or is in the employment as a director or KMP. Please be careful. Other employees are not covered, but KMP is covered. So here, Anil's relative, Neha is a relative of Anil now, wife. She is a KMP. The minute they got married that day, along with the marriage wishes, we have to also tell them, boss, Mr. Anil, you are no longer the auditor. And suppose Anil goes to Neha and says, no, see, I have to be auditor of the company. Therefore, you resign and you get a job in some other company. She will say, why the hell? I am happy in this company. Because I got married to you, I should change. You resign. See, like this, the first fight will start. Okay. Examine whether the following persons are eligible for being appointed as auditor under the provisions of the Companies Act. Mr. Prakash is a practicing chartered accountant, and Mr. Akash, who is a relative of Mr. Prakash, is holding securities of ABC Limited. Face value 70, market value 110, no problem. Less than 1 lakh face value, no problem. Mr. Ramesh is a practicing CA, indebted to MNP Limited for 6 lakhs. No, because the limit is 5 lakhs. If the indebtedness means the amount he has taken loan is more than 5 lakhs. Ramesh cannot be appointed as an auditor. Mrs. KVJ, spouse of Mr. Kumar, a chartered accountant, is the storekeeper of PRC Limited. Can he be appointed? Yes, he can. See, unlike Neha, who was a KMP, key manager, company secretary is a key managerial person. Whereas Mrs. KVJ is only a storekeeper. Only means, don't think I'm belittling her. I'm saying storekeeper is not a KMP. Therefore, Mr. Kumar can be appointed as a auditor. Now, these are the prohibited services. Quickly, you can even go through it on your own. Accounting and bookkeeping, internal audit, design and implementation of a financial information system, actuarial services, investment advisory, investment banking, rendering of outsourced financial services. See, my firm renders outsourced financial services. We also do accounting and bookkeeping services. We also do internal audit. All that we do. But We will never do it for a company where we are the statutory auditors. So we have companies where we are statutory auditor, where we will not render any of these services. We are having odd clients to whom we design and implement financial information system for a consulting assignment, but there I will not be the statutory auditor. We will not be a statutory auditor. That's why I said, when I say I will not be, don't get angry, because I am signing. So never. If they want to appoint as statutory auditors, then we will surrender the other assignment. Or in many cases, what happened? That assignment will be very successfully implemented. At which point in them they become so close to us that you can. In which case, I'll say immediately, all other close. Settlement closed. No other relationship with you. Then only you should appoint me as the CM. Very important. Tax audit not prohibited. You can be a tax auditor. Tax advisory services, no problem. You can. Management services, no. Or recruitment services, no. You may have. CA firms do render it. Nothing wrong in that, sir. Boss, you can do so many things. For example, I'm a trainer and a coach. I do training, corporate training. I'm entitled to do. As a CA, management consulting, entitled to do. You can't render such services, or the firm cannot render such. So who all cannot render? The auditor cannot render. Relative cannot render. Other persons connected or associated with such individual cannot. Entity in which such individual has significant influence or control cannot. Means more than 20% shareholding. No. Entity whose name or trademark or brand is used by such individual. Okay. Cannot. For example, there's a famous leading firm. It's got a trademark. Okay. That mark is used by, we are a licensed firm in India for them. We use it. Now, that firm can also not do anything. See, this is typically because of the great, what shall I say, the Sarbanes-Oxley game, that Arthur Anderson, okay? That name is, I'm missing that name, yeah. That company, wherein, Arthur Anderson was giving consulting, engineering consulting. And also the firm. See, Arthur Anderson had consulting division. They were doing. Whereas the firm was also auditing. So they were doing. This is why this whole thing was bought. On the one hand, the name is slipping my mind. The name of that company, it's a famous name, slipping my mind. That's okay, no problem. See, Enron. So Arthur Anderson was giving consulting. They were out. They were body shopping. They were sending engineers for the energy projects. They were doing audit, all sorts of energy audit, all sorts of engineering consulting work, and all they were doing, management consulting work. To Enron. They were also auditors of Enron. So even if you segregate, see what they would have done is they will have one entity, some firm with Arthur Anderson firm. Then they will have one more consulting division, which is finally became Accenture. So Arthur Anderson Consulting. So separate entity, but still co-partners will be common. There would be some connection between the two. Then, or minimum what happens? You are using the same name now. See, the consulting firm is using Arthur Anderson. You're also using Arthur Anderson. So this trademark or brand is used by you. Then, no. Okay. So those entities also cannot do. This seems like a very strict control. I'm sure there are 101 loopholes that are being used or misused as the case may be. For a firm also, the firm cannot do, partners of firm cannot do, individually, parent firm cannot do, subsidiary firm cannot do, associate or entity of the firm cannot do, entity in which the firm has significant influence, all that. Entity whose name or trademark or brand is used by the firm. Like I said, Arthur Anderson Consulting, that Arthur Anderson name is used by the firm. Then I give the example of Arthur Anderson because it's a real case where it happened. Now that firm has destroyed and destructed nowhere. And the consulting part alone became Accenture. I think the practice got acquired by EY or not acquired, just the clients will simply pour out and come because they need somebody to audit. Who else can they go to? Next fellow is come. Okay. So the Enron resulted in what was known as Sarbanes-Oxley, a law proposed in the Senate of US by two senators, Sarbanes and Oxley, which became a stringent control on the auditors and board board effectiveness, all sorts of things, independence of auditors, independence of board, became very gruesome. And that got slowly trickled down into Indian law. And the Companies Act 2013 is a sort of an embodiment of Enron, Satyam. All that learning has gone into this. In fact, many of the provisions in accounts and audit you will find are because of a hangover or hang up from Satyam and Enron. So the MCA sees shadows everywhere and threats everywhere for independence. And they keep on closing. So finally, the best auditor should be a sannyasi. Ideally, I should take sannyas and as a total sannyasi, like in second chapter, I'll be totally sthita prajna. No desires, nothing. I'll be the most independent person. In fact, many of us chartered accountants, in practice, we reach that state of detachment where money doesn't matter for us anymore. And we are not cheated by that false lure of money. Seriously, I'm not joking. You go to senior chartered accountants, most of us will be laughing when we talk about, sir, I'm going to do, my billing is 2.5 million. Okay, very good. Please, it will not inspire us anymore. Money doesn't inspire us anymore. Money has lost its value. Not that we don't want money, but that is not the lure. That is not the reason for which we perform our services or our work. Okay, this is, you may not agree to this at a very young age, but try to bring this into your mindset over a longer career. Suddenly you will find you liberated, and that you will earn money, but liberated, and you'll not be dependent on money and its thing. You'll be independent, truly independent, and you'll be able to take meaningful decisions in your life. Okay. See, remember, there is a rat race, and if you win that rat race, who are you? You are the winning rat. Don't forget. The minute you join the rat race and say you win it, what is happening there? Okay, sorry, this is more of a general comment, not to be taken as specific about anyone in person. So, now, as I told you before appointment, you should obtain the following from the auditor: a written consent, a certificate from him or it, means firm, that appointment, if made, will be in accordance with conditions as may be prescribed. Like, for example, the number should not exceed 20. He should not have suffered from he should not be suffering from any of the disqualifications. Okay. He is not rendering any of the services, etc. After the appointment in the AGM, the company shall inform the auditor and file a notice of such appointment with the registrar within 15 days. Appointment includes reappointment. So all this has to be followed for reappointment also. Auditor should also submit a certificate. Is they eligible? The proposed term is as per the limit. The appointment is within the limits. And if any proceedings are there, he can give. So long as he is not convicted, he can give a list of proceedings against the audit firm, pending with respect to professional matters. But sorry, that fourth item, I'm feeling very bad. Well, but if years down the line, boss, why should you have proceedings, ma? Why can't we run our affairs in such a way that we can be ethical? What is the problem here? I don't know. So I'm not able to understand. Why? Why? Your name is more important. Your honor is more important. Money is nothing. Think like that. Your name and honor is more important. So act ethically. So even today I had a client. She came, she had some problems in IT. We were discussing, etc., etc. But somewhere I got the general feeling that she has some political connection. So the minute I suspected, I asked her, Madam, please confirm to me you are not a politician or in any way connected with any political party or political thing. Why, sir? Why? Said, Madam, I have this thing. I will not be an auditor for a politician or anybody having political connections. What, sir? Why are you telling like this? Sorry, madam. That is my threshold level entry. Because the minute I let a political person or a politician into my audit, into my list of clients, automatically I'm getting tainted. Even if that person is the most greatest politician in the whole universe also, I don't want it. Because once I make one exception, I will stop. I can't stop. So please go. This is, see, you might ask me, sir, where is it said in the institute guidelines, institute code of conduct? It is not. Obviously, somebody should be the auditor for these persons, not me. Because I value my peace of mind and my peaceful sleep more than any money that these persons can give me. Whatever is obey money or power or position, whatever these people can convert to me is temporary and temporal. Once they lose the power, they go to jail. Everybody along with them has to go. Why? No need. Rather, we support good business people who build businesses over 100 years, 50 years. See, my firm is 50 years. We've got clients who have been with us for 40 years and who are 60-year-old clients. So we've been assisting them. So they are, see, maybe they won't pay the type of fee that a politician or a cinema actor will pay. So, okay, whatever you have and enjoy. You might ask me, why are you telling all these things? Because we are studying auditing. Remember, these are the mundane provisions of the Act. Anybody can read the provisions and interpret them and do something. But at the core of our profession is ethics. And the core of our profession is a sense of honor in you as a member of the Institute of Chartered Accountants of India. That is why we are unique. It is definitely our knowledge, but knowledge alone does not make us great as a profession. Knowledge coupled with a sense of honor and ethics and, independence. That is why every member of the institute walks with his or her head tall. We are members of the Institute of Chartered Accountants of India. That pride is there in us. That pride does not come with money or Mercedes-Benz car or whatever, the 5-bedroom apartment in the heart of the city. All that is, it's happening. The honor is coming because I'm a member of the Institute of Chartered Accountants of India. That I want you to take a little bit from me today. Otherwise, the sections you can learn, What big deal? And you can loophole, you can find out, you can twist it, turn it. Please go ahead and do it. Learn how to do it. But no, go beyond that and become a worthy member of our institute. Sorry, this is my humble suggestion. Please don't take me otherwise. Now coming to the point. Term of auditor. See, one more thing that the 2013 Act brought in was they said, hey, long association with the company would lead to a kind of a easygoing approach. There may be some connections and the auditor may become used to it. So they said, for certain companies, the term of the officer, there should be rotation. And also they said minimum for certain class or classes of companies, the auditor should not be for more than one term of 5 consecutive years. See, normally the auditor is appointed for a term of 5 consecutive years. Right? Like that, you can be appointed for 5 years forever. But for certain companies, certain prescribed class of companies, except OPC and small company, the auditor cannot hold office if he is an individual for more than one term of 5 consecutive years. If it is an audit firm, they can be appointed for 2 terms of 5 consecutive years. Right? Who are these companies? All unlisted public companies having paid up share capital of 10 crores or more. See, anyway, listed companies are covered here, please. Listed companies are covered. Listed companies, are covered. In addition to listed companies, this category. Unlisted companies having paid up share capital of 1 crore, 10 crore or more. Private limited companies having paid up share capital of 50 crore or more. All companies having a paid up share capital of below threshold limit mentioned in A and B above. But having public borrowings of 50 crore or more. Though I have not mentioned or, the word is no missing, it is or only. Or any one condition is satisfied, so you become a prescribed class. So unlisted listed company, definitely auditors rotate in firm means 5 years, then another 5 years maximum. Then you have to appoint some other firm. Individual 5 years, then you have to appoint somebody else. Rotation of auditors. So any one of these conditions is satisfied, you will come into that category. Right? One-person companies and small companies are excluded, even though they may be satisfying some of these. So an individual auditor who has completed his term, that is one term of 5, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion. So cooling period. This is called cooling off period. So 5 years he has to cool off. Then again he can be appointed. But 5 years he can. An audit firm which has completed its term, that is 2 terms of 5 consecutive years, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion of such term. Okay, 5 years cooling. Audit firm having a common or partner or partners to the other audit firm whose tenure has expired in a company immediately preceding the financial year shall not be appointed as auditor of the company for a period of 5 years. See, company, firm A is doing the audit. Firm A has 3 partners, A, B, C. Firm B is there where B is the partner. Now, this is a firm in which there is a common partner, B. Now, A, B, C, 5 years over, 10 years over. Now, they want to appoint another auditor. B wants to be appointed. No, B and co cannot be appointed because B is a common partner. So, neither ABC can be reappointed, nor B and co can be appointed because there is a common partner, Mr. B. Okay. Here is an example. Ram, Rahim, and Robert and Company is a firm of chartered accountants with 3 partners, Ram, Rahim, and Robert. Robert is a common partner in Robert Associates, an LLP. Agreed. So Ram, Rahim, Robert appointed for 2 consecutive periods of 5 years. Enjoy 2016 to 26. Now the company wants to appoint Robert Associates as its auditor. Can they do so? No, because of this rule. In audit firm having common partner or partners to the other audit firm whose tenure is expired shall not be appointed. So Ram, Rahim, Robert tenure over. Robert is having a common partner, so Robert Associates cannot be appointed. Lemon and Company, but see this problem, if you are able to appreciate, it will show some variations to this general trend. Okay. Yeah, good. I'm finding Mr. or Miss, I don't know, Sangeeta Vani. It is saying Mr., but I don't know. The name looks feminine from the southern region. So thank you for participating, madam. Others can also put up answers or queries and all on the query pad itself, which I will definitely see. Lemon and Company, chartered accountants, Lemon and Company has CAM and CAN as partners. The statutory auditor of a listed company, Mrs. Big Limited, for past 6 years, as on 1/4/2022. So they can't continue. CAM and CAN. CAM is also a partner in another chartered accounting firm, Dew and Company. Chartered accountants. Now tell us. So Dew and Company has a common partner with Lemon and Company, right? So up to how many years can Lemon and Company continue as statutory auditor of a Big Limited? Being a firm, they can go for 5 + 5, 10 years. So total, they can go for 10 years. What shall be the cooling off period? 5 years. So one is a straightforward theory question. If you know the answer, you write it. Now, suppose that period is over. Then can Dew and Company be appointed as statutory auditor of Big Limited and its another listed subsidiary, Dark Limited, during such cooling off period? Be careful. This is a double-barreled gun. 2 questions, not 1. So don't answer in 1 line. It has to be answered 2 lines. Can Dew and Company be appointed as statutory auditor of Big Limited? Big Limited is where Lemon and Company was the auditor, no cooling period. So Dew cannot be appointed as statutory auditor of Big Limited. But subsidiary Dark Limited, it can be appointed because he shall not be eligible for appointment in the same company. There we do not speak about subsidiary. Please don't assume, make law on your own and say, no, sir, subsidiary also it cannot be appointed. Subsidiary Dark Limited, it can be appointed. One more question. Can Lemon and Company be appointed as internal auditors? Yes, they can. During the cooling off period, yes. In fact, in many cases, that is what the company will do because they want us to continue. They will want us 5 years later. So they'll say, sir, Mr. Srikanth, please don't go away. You become internal auditor. You be with us. We need your support and services. Like that. Because the minute the 5 years get over, I'll go to the MD and say, sir, 5 years over, I'm going by. What, Srikanth? No, you can't go. How, sir? The law is very clear. I cannot be your statutory auditor. Immediately you say, statutory auditor, kya hai? You leave that, boss. You be tax advisor, you be tax auditor, you be do whatever you want, man. Send me a bill. Don't go away. That's all. So that is the type of link that some of us have with our clients. Whether we want or not, they will keep us. So what to do? The laws may say, so I will say, boss, you find yourself a statutory auditor. No problem. That also you will say, you yourself find and tell me, boss, how can I do that? Anyway, I'll recommend a friend and I say, hey, boss, you become the statutory auditor. I will become the internal auditor and tax auditor. Actually, this is the reality. There is no unethicality here. What is that? He wants me to continue. The shareholders want me to continue. We can see because again, we are beating the wrong horse. See, merely because an auditor is there for a long term doesn't automatically mean that his independence is lost. On the other hand, his experience is more, and his ability to audit and advise the company is more. A new auditor will find it difficult. So just that, long-term association, it's okay. I agree with you. 5 years later, bye. But the client will beg me to continue. He will literally fall up with it and beg. Because the type of in-depth knowledge I have in that firm industry, in that company will be tremendous. And that cannot be overnight replaced by a new firm. Sorry, this is the reality. Whether we like it or not. Okay. So this, still, if you feel that if I continue, my independence is lost, I will obey. I will move away. Let somebody else come who is independent for 5 years. Then again, 5 years I will come. Then I keep on going. Then, and it's another listed company, Dark Limited. Yeah, Dark Limited, I can be anything. But Lemon & Company, I cannot. I see, again, I use INA. That firm, so-called Lemon & Company, cannot be statutory. Okay. So, I think you got a broad idea. Let me quickly move on. I don't want to waste time because I need to take one more topic. My hope was to cover 2 topics today. Hey, casual vacancy, please remember, in the case of a government company, this controller and auditor general will appoint. Other than government company, other than resignation, any other casual vacancy, the board of directors can appoint in 30 days. Right? If it is resignation, then only the members have to approve it. So the board will appoint. Then the members at a general meeting convened within 3 months of recommendation by board should appoint the auditor. Such auditor will hold office only till the conclusion of next AGM. At the next AGM, you have to appoint either him or somebody else for another 5 years. So this man will only be stopgap. Suppose the casual vacancy is, casual vacancy can be due to anything. Casual vacancy, not due to death. So these, you can go through all this. The removal of auditor also, it is fairly simple. Before the term of expiry of his term of office itself, you want to remove. He is still conducting the audit. You want to remove. Or at the annual general meeting, the auditor has to be reappointed. At that AGM, you say, we won't reappoint you. To appoint somebody else other than the retiring auditor. Or to expressly resolve that the retiring auditor shall not be reappointed. Finally, in cases of fraud. So, you want to remove the auditor before the expiry of term. This is the protection we have got. See, you are auditing the company. You are the statutory auditor. No one would say, use you. Why I? You. You are the statutory auditor. You are auditing the company. You come across many discrepancies. You keep telling them this is wrong, that is wrong, that is wrong. They are unhappy with you. One auditor, you are always telling wrong, wrong, wrong. So they want to remove you. No problem. Go on. See how. A board meeting to be held first. So at that board meeting, they have to decide about the removal. And then they can't simply remove you. They have to file an application to the central government. They have to go to the regional director, the central government, and file Form ADT2. Therein, they'll have to give reason why you want to remove the auditor. Obviously, they'll cook up all false. They'll say auditor is not coming regularly. Normally, we maintain attendance register at the client's place. See, every day, team of 4 people have come. Partner has visited twice a week. Partner has come every day. We have come, we have sat and we have called for all these details. See all the documentation. I have sent a mail after mail. You have not given. Whatever you gave, I found out error and I told you. When I pointed out the error, you are not replying. I have that is why documentation will support you. Anyway, so ADT2 they are sending. Within 30 days of passing. Then the CG will go into it. They won't simply pass an order. The auditor will be given an opportunity of being heard. Wherein the minute this game starts, dangerous game. You started the game. I will finish it. That's it. My reply to the CG's letter could even result in investigation of this company. So it's a dangerous game to play. That's what this is a great protection for us as auditors. And the board knows also before the expiry of term, you cannot go near this fellow because the minute you go, why are you removing him? Because you have done some wrong and he is pointing it out. The minute you go to the CG, what the CG will do, why? Of course, the central government doesn't like auditor. They will call, they will bang us. But finally, politely, I listen to the regional director. Finally, I'll say, this is what has happened. Please see, I'm asking these questions. If you think that is okay, please remove me. What is this? Oh, they are doing like this. They're doing. Yes, sir, there's a violation, 186 violation, 185. I keep on telling them they're not. Then he will immediately say, you go home. I will take care. He will send an investigation letter to them straight away. So removing me will be the least of their problems after that. Okay. So, this is a real great protection for us, believe me. Okay. Because if the threat is there, we can always say, Baba, remove me, go. Go to see central government and remove me. We'll see what happens. The minute they know that this process is there, they'll keep quiet because they have to really, really come out with well. And of course, if the auditor is arrogant, behaving badly, not doing his work properly, unnecessarily delaying, yes, then the company has a very good opportunity to remove him and appoint somebody else who will be more, sincere, have good documentation, come regularly, finish the audit. Okay. So for a lazy auditor, for an arrogant auditor, yes, this can be used by the company to remove him. But for a sincere auditor, this removal can never be a threat. They cannot threaten you and me by removal anymore. Okay. Anyway, but even if you want to remove him, you have to go to the members, pass a special resolution. And that general meeting should be held within 60 days of receipt of CG approval. See, Mr. Sachidanand was appointed as auditor of Moonshine Limited on 19/9/2019. The company wanted to remove him before the expiry of his term. For this purpose, the necessary board resolution was passed on 21/2020. The necessary application was preferred in Form ADT-2115-2. The central government approved the removal on 3/3/2020. The company held its general meeting on 15/5/2020 and passed an ordinary resolution 15/5. So within 60 days. Am I correct? See, 15/2, the approval is received on 3/3. So 3/3 means 3/4/3/5, 60 days. So this is held on 15/5. Beyond 60 days, I think. That is also wrong and passed an order resolution. So for both counts, it is not valid because you have to hold it within 60 days of the approval, receipt of CG approval. So if you assume that it is received on 3/3 itself, still you have to, within 60 days, you have to hold it. So March to April, April to May. So by 4th of, since 31 days in March, so 3rd or 2nd of May, 60 days will be over. You are holding the general meeting on 15/5 and passing an ordinary resolution. Sorry, for so much effort, you have done the wrong things. So the Sachidanand, this removal is not valid. Okay. Now we'll move on. See, I am not covering retiring auditor because it's a fairly simple topic. Procedure for appointing a retiring auditor. And in case of fraud, etc., also the auditor can be removed by the tribunal suo motu or on an application by central government. If the tribunal is satisfied or by any other person, the auditor has directly or indirectly acted in a fraudulent manner or abetted or colluded in any fraud. See, this is all classic Satyam reaction. Because only one auditor did it to my knowledge, and that fellow was Satyam auditor. Other than that, nobody has done. Because nobody will do it. Abetted or colluded in any fraud or in relation to the company or its director or officers. So it may direct the company to change its auditors. And the removed auditor shall not be eligible to be appointed as auditor of any company for 5 years and liable under Section 447, which is a serious penalty, heavy penalty, imprisonment. In case of firm, the liability shall be of the firm and that of every partner who acted in a fraudulent manner. Other partners are safe. The firm's money has to go. Okay. So this is where, if it is an LLP, to an extent, you are safe because even The partner, of course, the fraudulent partner is liable to the shareholders. Okay. So the provision is without prejudice. Without prejudice means in addition to. That is, in addition to actions under this act, you can also go for. See, this provision is without prejudice to any action under the provisions of this act or any other law. See, believe me, once an auditor has committed fraud and has colluded, the shareholders have suffered losses now. They are entitled to claim compensation from the auditor under civil law. That remedy is still available to them. Because the auditor is being removed and punished under 447, he will also be liable for civil remedy. Any shareholder can say, look here, based on you only, the share price went up. Now the share price has gone down. We have suffered losses. You have to compensate us. So that is why professional, all big firms, big firms cut above the firm, we all need to have professional liability insurance. In case there is any such claim, only the insurance can help us. So Paramanand, the auditor of Fly-by-Night Operators Limited, discovers that the directors have quietly siphoned away the funds through false bills and unauthorized funds transfers. That's why they are fly-by-night. He colludes with the directors and issues a clean audit report. Wow, what a great guy. What are the legal consequences? This is the answer. This entire slide is the answer. See, in resignation, again, what happens now? In those days, we used to resign and quietly run away. Now they are saying, no, you have to file Form ADT3 within 30 days informing why you are resigning. Give the reason. The reason is, suppose we resign quietly and go away, and later on fraud is discovered, even that resignation won't help me, because they will say, hey, you are aware that there was a fraud. Because you don't want to get caught, you escaped. You should have informed me in ADT3. Why you have not done? So even resignation is not a solution. Okay. Anyway. So this is auditor's duty to report frauds is also there. No, I'm just running through it a little fast because I want to do this. And there are also certain companies which are to appoint a cost auditor. And so what I'm going to do is, I'm going to the next topic, which is hopefully we will cover this today because it's not very big. Companies incorporated outside India. Before we do that, since I've been speaking continuously for about almost 2 hours now, I would love to have a small break for 5 minutes. After that, we will come and take up this topic and inshallah complete it by today. Sir, small break, sir. 5 minutes. and continuing with our session, let us now go to another topic, which is companies incorporated outside India. Now, it would be easy for us to call these companies foreign companies. Why we don't? That you will know now. In this session, I will tell you why we keep on using this long phrase, companies incorporated outside India. Why? Because the word foreign company has a very specific meaning in the Companies Act. Let us understand what it is. To understand this, of course, the legal provisions relating to foreign companies in 379 to 380. Body corporate, wide term. Under section 2, subsection 11, we saw body corporate or corporation includes a company incorporated outside India. Includes. Which is why, under the Companies Act, LLP is the body corporate. Which is the definition is inclusive definition. They don't define a body corporate. They say there are many entities which are body corporate. They are body corporate under the Companies Act also. LLP is the body corporate. A company incorporated outside India is a body corporate under the Companies Act, which means only company incorporated in India is a company. Friends, what does this mean for you? It means whenever in the board of BOS material, or in the BEAR Act, or wherever you see the word company, remember, does not include foreign company or a company incorporated outside India. Company means Indian company. Company incorporated in India under the Companies Act 2013, this act, or under any previous law, like the 56 law, 922, 20 law was there, like that. Okay. Before the independence, there were laws, etc. Companies have been incorporated under those laws. Okay. Okay. Now, company incorporated outside India is a wide term. It will include any company which may not have any connection with India also is a company incorporated outside. So long as it is incorporated outside India. Boss, there are two things very clear. Now, India hai, bahar hai, outside India hai. Whichever company incorporated outside India is incorporated outside India. Now, foreign company is a company which will have business connection. That is why foreign company is specifically defined there. So are you able to understand? My dear friends, see this picture, you will understand. The rectangle, this big rectangle, is the universe of companies. Universe. All companies in the world. Not in the universe, obviously, only in this world. All companies in the world. Out of that, you have one subset which is called companies incorporated in India. Either under the 2013 Act, older Act, what? Now defunct means out, stuck off out. So those companies which are actively in the list of the Registrar, Ministry of Corporate Affairs. Now, you have companies incorporated outside India. Outside India. That is another subset of bodies corporate. Bodies corporate is a bigger set. Within that, you have companies, LLP, everything is there. Right? Now, there is another set which is companies incorporated outside India. This small rectangle is companies incorporated outside India. So the bigger box is bodies corporate. Within that, all companies in the whole world are there, which are again classified into two broad subsets. What is that? Companies incorporated in India, companies incorporated outside India. Brother, these two sets cannot intersect ever. There cannot be a company which is incorporated both in India and in US, or in India or in US. Many times people come to me and say, sir, I'm a non-resident Indian. I said, please, sir, you are Indian or not? First we will check. Then we will see whether you're a non-resident Indian. So I'll ask that gentleman, do you hold a passport in India? No, I'm a US passport holder. Then you are not a non-resident Indian. You are a non-resident American. Okay, no, I'm from India. Yes, you are. But today you are a citizen of the United States of America. How can you call yourself Indian? Are you able to understand? You cannot be in both. No, I am Indian. Correct, your patriotism is appreciated, but your citizenship has to be reviewed. Like that. No, I am being very blunt here because these are mutually exclusive. You can't be a citizen of US and a citizen of India. You can't be a citizen of Australia and a citizen of India. You either be a citizen of Australia or citizen of India, citizen of US or citizen of India. Choice is yours. Like that, a company cannot be incorporated both in India and outside India. Either incorporate outside India or incorporated in India. Out of those companies incorporated outside India, some companies would come under the definition of foreign company. How? We'll see the definition, right? So remember, all companies incorporated outside India are not foreign companies. This is because the term foreign company is specifically defined. This is the problem with law. Your generally understood dictionary words and terms you cannot use in law. The minute you come into the law subject, you should be clear about definitions. Foreign company is defined very clearly. Company incorporated outside India includes foreign company. But foreign company, just because a company is incorporated outside India, it does not automatically become foreign company. It has to be falling within that specific definition. Now we come to that definition. Foreign company means any company or body corporate incorporated outside India, which has a place of business in India, whether by itself or through an agent, physically or through electronic mode. It is like Hiranyavaram, like Hiranyakasipu, they are giving place of business in India, whether by itself or through an agent, physically or through electronic mode, and conducts any business activity in India in any other manner. So there is a connection with India, Indian connection. In that sense, the first foreign company was obviously not only the first company and the first foreign company was the English East India Company, because they were the first company to have a place of business in India. Of course, at that time, when they had a place of business in India, this geographical mass was not known as India. It was different. It was Nawab of Golconda was there. Nawabs of Gujarat were there. The Sultan of Delhi Badshah was there. Okay, each one was there. And Marathas were there. The Rajputs were there. So each one calling itself something else. The concept of in India was not there when the British came. Okay, possibly why. But they were the first to set up a place of business in India, in Surat. The first Calcutta. The first business, first establishment was in Calcutta when they had a thing. Because the initial stages, they came to Surat and they set up trading points there. Surat, Malabar Coast, Konkan and Malabar Coast. They set up trading points. But then they became rulers. Okay. So has a place of business in India, whether by itself or through an agent, physically or through place of business includes a share transfer or registration office. Electronic mode is widely defined. I'm not covering it, but it is there in the PowerPoint. It is there in the long lecture. Please listen to the long lecture. Item by item, I'll take you through electronic mode. So many methods by which a company which is in US can have a place of business in India through electronic mode. Yes. The minute you order something through Amazon, you are dealing with a company which has a place of business in India through electronic mode. Okay. Even if you call it Amazon.in, even if you pay in INR, you're dealing with a foreign company. I'm sorry. You're dealing with a company incorporated outside India, which is a foreign company because it has a place of business in India now. Right? So explain whether the following companies can be considered as foreign company. Please note, foreign company defined to subsection 42. Okay. So you have to go by this definition. A company which has no place of business established in India, yet is doing online business through telemarketing or whatever. Even Amazon doesn't do any telemarketing. They enter your life through the device that you hold in your hand. Every day they keep pushing things to you. It is a foreign company. A company which is incorporated outside India, employs agents in India, but has no place of business in India. Okay. See, it employs agents in India. It is not having a place of business in India. What? No, you might ask me, sir, how is the difference? Agent is mentioned, no, sir, like that. If you say, I will say, this is the point. Sorry. No place of business. If it has place of business and that place of business is operated by an agent, then it is a foreign company. But it has no place of business. It has agents. See, for example, there could be marketing agents there who will procure orders and send it to their foreign counterpart, who will then supply directly, arm's length, will directly to this local guy. Nothing wrong. I can be a commission agent for a foreign company. I go there, meet them, I do all the groundwork, I talk to them. So the German company, then finally I conclude the deal. Then maybe a couple of guys come from Germany and do some consulting and all. Then finally they go back, send the advance bill, blah, blah, blah. There are a lot of people who do this. They are agents in India, but that company has no place of business in India because I'm an agent, boss. I'm not his employee. The minute I have a place of business in India and I employ people to run it, they become agents. On my behalf, they are, on behalf of the incorporated outside India company, they are running this business. Then it is a foreign company. But just because there are some agents there, it doesn't become a foreign. It is a company incorporated outside India, but it is not a foreign company. A company incorporated outside India having shareholders who are all Indian citizens doesn't matter. Because doesn't matter. See, for example, 4 Indian citizens went abroad. They joined Stanford. They wanted a startup. They have a startup in near Los Angeles. Great. And they are running it in US, boss. Just because they are Indian citizens doesn't mean that that company is a foreign company under the Indian law. That company has nothing to do with us. Maybe they are running online business in US. So happens that the owners are Indian citizens. Most probably within the next 1 year, they will all become citizens of US, California, state of California. So chances are high, right? So that is not the point. In the light of the provisions of Act, whether the following companies. Redstone Company Limited is a company registered in Singapore for a company incorporated outside India. The board of directors meets and executes business decisions at their board meeting held in India. No problem. Maybe they want to enjoy Goa, Mahabalipuram, have a board meeting. That is not a problem. But does the company have a place of business in India? No. Then having a board meeting is not having place of business in India. Okay. Blue Star Public Company Limited registered in Thailand. Wow. Has authorized Mr. Y in India to find customers and to enter into contracts with them on behalf of the company. That is, see, please remember my earlier example. The agent merely procured the order and sent it to the foreigner. Thereafter, the company directly arm's length dealing agreement is entered into by the foreign company with the Indian company. Here, the agent is authorized to enter into contracts. That makes it having a place of business in India through an agent. Okay. XCX Limited Liability Limited company registered in Dubai has installed its main server in Dubai for maintaining office automation software by cloud computing. Whatever technical terms you use, brother, you have installed you are having a client in India and you're doing cloud computing for Indian client, then it is having a place of business through electronic mode. The minute you touch my guy, you are bound by my law. The minute you say you are having a client in India, sorry, you are doing business through online, or you are having a place of business through online, electronic. Now, please note, sections 380 to 386, both inclusive, and section 392 and 393 shall apply to all foreign companies. The minute you say you are a foreign company, everything will apply to you. These sections will apply to you. But if one or more citizens of India, or one or more companies or bodies incorporated in India, or one or more citizens of India and one or more bodies incorporated in India, whether singly or in the aggregate, hold not less than 50% of the paid up share capital. See, first of all, remember that company should have a place of business in India. Thereafter, you should show that any combination of citizens or bodies incorporated in India are holding not less than 50% of the paid up share capital, whether equity or preference, partly equity and partly preference of a foreign company. Then such company shall comply with the provisions of this chapter and such other provisions of this act as may be prescribed. See, that list of sections which are applicable is there in the material. Also in my PowerPoint and in my long lecture. You can go, it's a long list of sections which are applicable to a foreign company which has Indian citizens holding not less than. So, to become a foreign company, it has established a place of business in India. In addition to that, not less than 50% of the paid up share capital with the equity of preference is held by one or more citizens of India or one or more companies or combination of citizens and companies. Okay. So the applicable provisions will apply to it as if it were a company incorporated in India. Okay. That list is a long list. Kindly go through it at your leisure. See, my dear friends, I've always been telling this to you right from my first lecture. You should always inquire as to the reason for enacting a provision. The law has always got a purpose. Once you know what the purpose is, thereafter you can question the law. You can say this law does not serve the purpose for which it is. So first thing you should ask is, what is the purpose? Any law. The minute the government comes to you and says, Parliament has enacted this law, we will ask, what is the purpose of your law? Does the enactment, the way it is worded, the way it is applicable. See, your laudable purpose was stated by the minister in Parliament, but the words of the statute are not complying there. What she told and what is really happening here is different. This law is not using that terms. They are using different words. So what's happening here? We can ask only by questioning the provision. What is the purpose? Reason. This enables a clearer and logical understanding of the provisions and also facilitates analysis. In this context, the purpose of Chapter 22 is to monitor and control companies incorporated outside India with regard to their activities in India. What you do in China, I don't care. What you do in Taiwan, I don't care. You come to my country, what are you doing? I want to know. And I'm entitled to know as the government of this country, you have to tell me. So long as a company for setting up a place of business in India keeps giving proper information, complies with the law, you're allowed to continue. See, is this not fair? Because, boss, you go to China, the Chinese government will say, boss, tell me what you're doing. What is your purpose? We are entitled. They are entitled to us. This is why we are called sovereign. I have the right to ask you. You can't just like that walk in and set up a place of business in my country without becoming accountable to me. Right? That is the point. Then once you understand this, then these are only purely procedural, boss. The company has to file certain details. It has to file its charter, names of directors, name of the person in India who can receive notice. It's all purely procedural, right? All these details, when it should be filed, within 30 days of the establishment of its place of business in India. The minute you establish a place of business in India, within 30 days you have to file. Where? To the registrar having jurisdiction over New Delhi. Because you are a foreigner, boss. So you come to New Delhi, come to my capital, tell me who you are. I want to know. Then, of course, the Ministry of Home Affairs will be informed. They will do a thorough verification of this fellow. Who is he? What are his antecedents in this country? Is he having any other goal which will threaten the sovereignty of my country? How? In Form MC1, along with prescribed fees and documents required to be furnished with approval by RBI under FEMA if required. Right? So these are all the financial statements to also be delivered, but only with respect to its Indian operations. Okay. It should also file a copy of its annual report and balance sheet and all from the foreign country in translation. But audit will be done only for Indian operations by an Indian CA. So the Indian operation should be audited by an Indian CA. Right? So what all we studied in audit and auditors will apply mutatis mutandis with suitable changes to a company incorporated outside India. Also, the company incorporated outside India, foreign companies should display their names in English language and local language, country of incorporation, and whether the liability of its members is limited. Next time you go to the foreign bank like Citibank or any other foreign company, just see in the outside the building or on the outer wall, they will put the company incorporated in Germany as a limited liability company. You'll see that. Anyway, so these are all procedural sections. So that name should also be displayed in the letterhead, etc., everywhere. And see, service of process. Process means any notice or summons received from a court or government authority. Simple, sir. Company comes, sets up a place of business in India, does not comply with GST law. Nokia did it. There are certain basic provisions of GST. Whenever you are charging exempted, whenever you are charging a concessional, whenever you are asking somebody to charge you concessional GST, you are supposed to collect C form and keep it. You have not done it in those days under the old law. You keep not doing it. Who advised? Nobody advised me. You didn't get the right advice. That is not my problem. Okay. So when the audit was conducted, the GST, the sales tax audit, a huge demand. You have to pay it. So when the demand will be served on which address? You should give a name and address of, plus you should give a name and address of a person or persons in India who are authorized to accept. Ideally, it should be a leading firm of lawyers. On your behalf, they have to accept it and take necessary action. So you may just quietly run away. You do all the nonsense, don't collect, you pay lesser GST, you concessional tax, and you run away. Then on whom will I serve the process? So that name and address of the person or person should be mentioned. Service of any process, notice, the other document required to be served on a foreign company, that person or at that address by post on personal delivery shall be deemed to be sufficient service. Even though, see, I serve it on your address, you are not there. Now, I will serve it on that authorized person whose name you have given. That's all. Service has been correctly done. I need not serve, the government of India need not serve process at your foreign address. Your head office in China, I need not serve. I don't know where it is. I will serve it on your local address and on this authorized person. If that guy doesn't accept it, not my problem. I will serve it on him, if necessary, by affixation on the door, and I will go. Then let you take, if you don't take action, if you have any assets in India, I will seize it. I will attach it. When I say I, here I mean the government of India. Okay. See, sometimes I might sound a little tough, but that's it. See, we are not fools. If a foreign company wants to make money in India, we are welcome, come and do it. But abide by my country's laws. Every foreign company shall prepare and file an annual return in Form FC4, along with prescribed fees to the registrar. This is like the annual return. Every year it has to file within 60 days from the last day of its financial year. Right? Also, any document which is in foreign language should be translated into India. And if so, it should be certified. That is, it's an authentic copy, should be signed. Usually, this will be done by a notary public in that company, in that country, if it's outside India. See, usually what happens now, the foreign document, for example, sometimes we get Chinese and Finnish people and all coming. They have a passport which is in their national language. It won't be in English. So this will be provided to the government of India as a proof of identity. At which point in time, we have to get it translated. So we will get it translated by an official translator in India and abroad. And that translation, it has to be notarized. Also, our embassy in that country has to apostille it. They have to certify that the notary is a valid notary. That is called apostilling. And that entire set of documents has to come to India. Which is why incorporating a company with foreigners, or non-persons resident outside India or foreigners, so real pain. We tell them, these are the documents, everything has to be apostilled. You have to get it translated. Translation should be notarized. Notarization should be apostilled. The whole set should be sent to me. Only then the time begins. And such translation, if it is done in India, should be authenticated by an advocate or an attorney or an affidavit of a competent person. Means there are certain people called registered translators who have an adequate knowledge of the language. They should certify by an affidavit and say, either I have translated it and it is the correct translation, or they have verified the translation and it is the correct translation. Right. Director includes a deemed director also. Anybody in whose de facto director, on whose behalf the company directors are accustomed to act. So Qing Ai Wading Industrial Company incorporated in China established a place of business at Mumbai. The charter document is in Mandarin Chinese. So you have Cantonese, you have Mandarin. Two broad Chinese languages. Other than that, there are about 15 dialects. The broad, well-known languages are Mandarin and Cantonese. Okay. It is required inter alia. Mandarin is like your Sanskrit. It is superior. And Cantonese is like your Pali, sort of local language. So it is required inter alia to file a certified translation. Who can authenticate the translated charter documents? If the translation is made at Mumbai. Friends, 2 marks. All you need to do is write this. That's all. This part. That's all. 2 marks, take it and go. Enjoy. Go rejoicing on your way. Okay. So this is the things. And with this, foreign companies over, all we need to complete FEMA, General Clauses Act, Interpretation, LLP. Inshallah, we'll do it in the next 2 classes on 29th and another 1 day. Inshallah, we'll do that. This is the plan of action. Any questions are there? Welcome. You can ask me. I am available. Let me see if any chat, any questions are there. Chat me. Good evening, sir. Yeah. Was that somebody asking a question? Any questions? Okay. If you can unmute, I think, sir, Mr. Ashok, should they be unmuting or something like that? Unmuting power, whatever, should you give? In our next class, we will take up FEMA. We will finish FEMA and take up General Clauses Act, Interpretation, inshallah. Then LL. I think we can finish. If you have any doubts, you can ask. That's why I stopped a little early to give 5 minutes for doubt. Mr. Ashok, I think students may have to have permission for unmuting. Is that so? They can unmute themselves?
Dear,
Sorry, madam.
dear students, please make a note that do ask any query if you have. Sir is there to help you with the queries. This is a golden opportunity because we have with us Ashvikant sir, who is
You
a
can
very
ask any
learned
doubt.
faculty.
Thank you, madam. So nice of you. You can ask any doubt from earlier topic also. See, not only today's this class. In the next class also, you can bring any doubt from an earlier topic also. No problem. Please come with doubts. I'll be more than happy to take your doubts. In fact, in those days when we used to have long lectures, the query pad will be deluged with doubts. Continuously, students will raise doubts. While I'm conducting the class, I will reply to the doubts. It used to be like that. And students are also getting. So you can always raise doubts. In fact, I will conclude today's session with a quote from my, as I mentioned, one of my greatest teachers, CAR Bhupati, past president of the Institute of Chartered Accountants of India. He used to tell me, Srikanth, you complete a class and you ask the students, do you have any doubts? And they have no doubts. They're simply not having any doubts or questions. Then you can be sure of either of 2 things. Either that they have understood completely whatever you told, or more probable B, that they have not understood anything. So unless there are doubts, no faculty will know whether he has communicated or not. Anyway, no problem. Enjoy. I hope you had a good session. Wishing you all the very best in the examination. Yes, madam.
Just a moment, sir. I would like to just tell one more thing to the students. Students, sir, I think we have already communicated it to you. We will be having 2 more sessions of this subject, which are not in your schedule as of now, but we will be having one or at least one or maximum 2 lectures who has to complete the whole syllabus. Okay, sir. Thank you, sir.
Thank you.
Thank you
Thank
for
you,
such
Mr.
a nice
Ruhani,
session,
for
sir.
Thank you, madam. Thank you, Ruhani ji, for your note. Thank you. Bye.